Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. You all know that drill. Hit that like button and subscribe if you already haven't. Just want to say two things. One, disclaimer, nothing on this video should be construed as financial advice. If you want to invest based on anything I say, consult a financial advisor or the proper people. I am just a person on YouTube. And secondly, I want to thank every one of you. I've crossed the 100 uh, subscriber market. So, and there's one subscriber. I forget how to pronounce it off the top of my name. I think it's like TJ3A. Just want to thank that person. He always comments on, gives me great support. So thank you, especially uh, TA. Just call it T. T, thank you to all my subscribers and especially T since he comments and always likes my video. I don't know if he always likes. I can't see who likes, but always a supportive comment. So anyway, let's get into today's market action. Obviously, the economic data, new home sales generally isn't big moving because it's pending home sales. That's really the one. But that was negative. Building permits, even though it was negative 2.8, if you look at the consensus 3.8, that was solid. So this data was more mixed, and you can tell by how the market moved really up a little bit, not much. Like the Dow Jones 15, S&P 8 points. I don't think the data had anything to do with today's market action, though. I think it was just technical moves, lights selling, lights trading. But look at you can tell the algorithms are pushing gold hard. GLD down really big today, 0.92%, almost 1%. Really look at it. See on Google Finance, it's up here. That's the previous close, and it just stayed down. So anyway, not really much to say about equities or whatnot. Let's go into a couple articles that I was looking on, and I'll just translate them to show you. Big inflation costs most people aren't paying. This is the funniest article because this is just pure gaslighting by whoever this senior economist. One of the biggest drivers of inflation cost is a cost that most Americans don't have to reserve. It's called owner's equivalent rent, or OER, which is technically, she's not lying. This is how they work. The scum of the earth. They technically aren't lying, but the reality is they are lying because this is really supposed to be for rent. It's not uh owner's equivalent, right? Yeah, a lot of people don't. I know people who rent out rooms because they can't afford rent, so they rent out a room from a homeowner. I've known many people, I've had multiple friends that have done that because they couldn't afford. But it's like, what owners could hypothetically charge to rent their own properties? It says what can be misleading is about this components. Shelter costs is most homeowners in the US are not renting their homes. This could be distorting how Americans view inflation and still showing signs of stickiness. And they're like, so this is just, if people are feeling bad and a large chunk of it is owner's equivalent rent, it doesn't make sense. So and they're saying this is why shelter cost is the biggest contributor to the CPI. And yeah, and it's just this is pure gaslighting because if you look at actual rent, to get rid, I agree they should get rid of owner's equivalent rent, but it should be rent. And rent is way higher than over equivalent rents. So, so yeah, still, most Americans aren't paying rent because the US is a nation of homeowners. Well, that's not true, but and I've done videos about many costs other than mortgages that are coming up, like maintenance, insurance, and other things. It says 60% are on a fixed mortgage, and said inflation's being driven by an item that people aren't paying. So first of all, like this isn't true. Like and says in fact, stripping out ORE puts the Fed closer to the 2% target. So and then yeah, and it might make sense to take ORE out because no one pays it. The reality is they would have to replace it with rent. And here it is. This is CBS. Rents are rising faster than wages across the country. Gosh, they have to have these videos, especially in these cities. So, and this is May 8th. It's not much different. And I can tell you from personally, there's a housing bubble. So rents jumped 30% from 2019 to 2023. So, yeah, if you look at it, and other cities where renters are feeling pinch include Baltimore, Cincinnati, Las Vegas, New York, San Diego. If you look at it, rents are going through the roof. So, and the other thing too is if rents are up, so are a lot of other costs, property taxes, among others. So, yeah, if you look at it, rent inflation is still bad, and taking out owner's equivalent rent, unless they used, you know, Zoom or Zillow or somewhere where, they show rents, the marketplace. And so basically, if you're watching and you're telling me, given, let's just pretend what she says is true in the article about 60% of homeowners or 65, I think, percent of Americans own homes, and 60% of those homeowners have a fixed mortgage. Okay. So who do you think has it? It's probably the wealthy, right? So if you want to decide who is right, is it me or is it that dumb colonist who's actually wrong? I will show you this article here that shows even wealthy Americans are struggling to make ends meet. Well, if inflation isn't bad, why are wealthy Americans? And this was out today. This article came out today. So why are wealthy Americans struggling to make ends meet? It's obviously, you know what? That must mean the cost of living is low. And I'm not just citing this article because I've talked about on my channel many a time. So what is about 1 in 3 Americans making six figures are worried about paying their bills, according to a new survey from the Federal Reserve Bank of Philadelphia. So notable increase of consumers making $100,000. They would probably fall into the category of the fixed rate homeowner. A lot of them probably do. A significant share of wealthier Americans are coping with financial pressure by cutting spending, including dialing back restaurant visits and entertainment. That's definitely very true. I live in the richest county. I see that. I live in the richest county in America. Definitely see that. Finding underscores of how years of high inflation and elevated borrowing costs continue to squeeze consumers' budgets, even for those higher end income spectrum. Nearly a third of consumers making between 100,000 to 150,000, or 149,999 a year, are concerned about making ends meet in the next 6 months. So there it is. That's up 21.3% of Americans in that income graph. So 21% are concerned. Is it because it's certainly not because they're fixed mortgage, I'll tell you that. That's not what has them. It's certainly not because well, they're not paying. So young Americans are more likely to be feeling the financial pressure than older. So let's just keep going to see if there's more. There was a notable increase in higher earning consumers nervous about paying bills in the longer run. So if you look at it, of course, the mood wasn't all that gloomy. However, growing share expect higher rates. This is and says those making 150,000 a year or more from up 20%, and consumers report feeling more optimistic than a year ago. But yeah, if you look at it, higher income people struggling to make ends meet, even the higher, I don't know why this keeps going up. So there it is. There it is. And the last thing I want to just do two more articles. Corporate IT spending isn't reflecting an AI boom. I've talked about this, that this isn't real. It's not going to help increase productive capacity. A lot of it's a glorified search engine. I am not, it's going to be around, but it's not going to be, so, but I don't think it's going to increase productive capacity or the economy or save the markets. Most of the spending on AI is being done by AI companies and public cloud companies preparing to run AI workloads for AI companies. And yeah, they say it doesn't seem a shift at this point. And I don't feel like going through this article. Uh, oh, this isn't even that much of an article. So I'll just read some of it. We went through uh let's see, that's partly cost. So yeah, that's where I want. That doesn't mean we'll see a shift at some point. Oh, the build it they will come approach of part of the companies like Microsoft, Alphabet may well pay off the line. So that's what it is. It's field of dreams. If you build it, they will come. That's the field of dreams. Yeah, it is a dream, but it won't be reality. But despite some analysts' insistence that this year AI will prove itself in practice, it's still unclear exactly how. There it is. So here it is. Basically, if corporate number crunchers are keeping the purse strings tight, AI may have to prove its worth before start spending. So it's one of the things. Maybe there's AI crash coming, and they just want to save face and say, "See, we didn't hype up AI so much." Of course, I couldn't. Nothing was hyped like this before in my life. I lived through Tesla, Apple, and everything else. And One last thing, this is just non-finance related. If you read this, uh, so basically they can remove misinformation. That's very scary. Because who knows? Maybe they'll say my channel is misinformation when I point out the inaccuracies of everything going on. So this is scary times. So who knows? But anyway, I will, regardless of this, I am gonna do everything I can. This channel will always be independent, regardless. So even if it means removal. So anyway, that's my promise. I will always tell the truth, regardless circumstance. And I think economics and finance are safe for now, but during the crash, they might just say, look, these people are the reason the economy is struggling, and let's remove them. So it was very scary. Anyway, if you, I'm sure there's other things, but this is a finance channel, so I'm not going to divulge deep dive into those topics. I'm mainly a finance expert. There's all sorts of political experts you can go to, uh, or commentators, whatever you want to call them. I Anyway, hit that like button, subscribe if you haven't. And I'm not even an expert in finance. I just have a background. I've worked in accounting. I've worked in financial journalism. I am an accountant. Done pivot tables, X lookup, V lookups, all that stuff. Uh, and I've played the market well. So, anyway, hit that like button, subscribe if you haven't, and I will see you next